Hello, all of you. I hope you all are doing good. In our previous session, okay, in the basics of accounting, what we discussed about the accounting process. That so, what we'll do that here today. We'll do the revision here, and then we'll start one by one. Okay, today we're going to start with the entity part. Okay, just let's do a revision what we have discussed in our previous session. So, what is this accounting process? First is entity. What do you mean by entity? It is an organization or individual whose books of account are being maintained. So for whom we are doing the accounting, what we call them? We call them entity. Then those entity have a transactions. So what is this transaction? A business dealing which can be measured or expressed in terms of money. What we call them? Transactions. So there should be a minimum two parties and there should be give and take. So for example, Reliance is an entity. So think from the Reliance point of view. So what does it mean transaction? Minimum how many party? Two parties. You can see that supply is one party and Reliance is one party. Give and take. So Reliance is receiving some raw material and it might happen he is paying the cash immediately or he will pay later. So that give and take might be happen immediately or it might be happen at a later date. So if he is paying the cash immediately, so we call them cash transaction. He is going to pay them later. So we call them credit transaction. Now, Reliance is selling something to his customer. So, how many parties? Two. First is Reliance and second one is customer. So, he's giving them, he's selling his sales and he's going to receive, it might be happen, he's receiving cash immediately or he will receive cash later on. Okay, so it might be happen, this give and take might be immediately or it may be at a later date. Now, Reliance, they have a transaction with employee or with the landlord, they are paying the rent, for them, they are getting the services. Here, employees are providing the services, some benefits are giving to these and Reliance, and for that they are going to pay to employee. So first is entity. In our example, the Reliance is suppose entity. Now there are transaction, business dealing, which can be measured in terms of money. So what we do that is we do the recording of all those transactions. So when I say we have to record of all those transactions that here, so we record in a book, we call it journal. What we call it? We call it journal. So we also call it primary books of account. This is the first book in which actually the transaction first time recorded here. But it is not necessary that here I have to maintain only journal. If I say I have enough cash transaction, so in addition to journal, I can also maintain the cash book. But here in cash book, all the cash transaction will be recorded in cash book and remaining will record in journal. But there are some other subsidiary book also, like the sales book, purchase book. We'll discuss all this in details that here, okay, in these basics of accounting series. That suppose let's say the sales book. In sales book, we record all credit sales transaction. So here we'll record all credit sales transaction. Example, I am saying sales book and the cash transaction will come and all remaining transaction will in journal. So listen carefully. It is not necessary that I have to maintain only journal. If I'm happy with journal, it's okay. But if I say no, I have enough cash transactions. So what I will do that here now, I will maintain a cash book also. That the cash transaction will record it in cash book and remaining will in journal. If I'm maintaining other subsidiary, for example, sales book, so we record a sales, credit sales transaction there. In cash book, we record cash transaction and all other transactions will automatically come in journal. So now very interesting that today we will start with the entity part here. These basics of accounting series, I'm going to discuss each one of them in detail. We are going to solve so many questions on it as well. Now here, after that we have a ledger, because here we record all the transaction date wise in a chronological order systematically. Okay, we follow one system, we call them double entry system, because every transaction has two effects, give and take. Now in ledger, what happened? I want the information. For example, if I'm maintaining only journal here, this is the recording stage. Now, after recording, we have a ledger, but I want a specific information. Information of same nature is recorded at one place, is known as what? The account. So one nature of information we are going to record it at one place. So what we call them? We call them ledger. The ledger is the name of the book. Under ledger, there are so many accounts that here. So from these journal, first of all, we maintain accounts. Like you can see the purchase account, sales account, salary account, rent account. All these are accounts here. So I want a specific information of one nature. I have to record same nature. We are going to record it at one place. So example that here now, all the transaction related to purchase will record from journal, will transfer to this purchase. All transaction related to sales will transfer to this account. All transaction related to salary will transfer to this account. All transaction related to rent will transfer to this account. So basically, if I say these are the boxes, okay, in our previous session, I used the term to make it simple, the boxes. I have one book, if it's purchase, I will take the information, transfer it to the box, which is called a purchase. Then information related to sales, salary to salary, rent to rent that here now. Now we have transferred the information, relevant information to those boxes, but in accounting, we don't call it boxes, we call it what? The accounts. Now, the process of transferring the information from these journal to these accounts, we call them postings. The process of writing the amount from journal, or we might maintain a cash book and other subsidiary book as well. So process of transferring the information from recording stage to ledger, what we call them the posting. Now we have transferred all the information from this recording stage to all these accounts. We call them posting that here. But what we do that here now, there's so many transactions in one specific account. So to make it simple, we do the totaling and balancing. So what it says is step number 6, totaling and balance. If debit side is more than the credit side, we call them debit balance. And if my credit side is more than the debit balance, is called a credit balance. What does it mean that? So this is a box to left hand side in accounting. We don't call it left hand side, we call it debit, and we call it right hand side credit. Like debit, credit, debit, credit, debit, credit that here. So what happened here that now we do the total that here. If my debit side is more than the credit side, we call it debit balance. Here we have 100 that here. So this circle is a balancing figure. So circle is a balancing figure. Which side is more? My debit side is 100. So we call them debit balance, and we write this 100 as a balancing figure. All these circle are balancing figure. Here on credit side, we write it on 150. So this is the balancing figure. So we call them credit balance because credit side is more than the debit side that here. Now, here debit side is all these we have discussed in detail in our previous session that here. 15 that here. So debit side, because debit side is 15, credit it's a balancing figure. So debit side is more than the credit side, we call them debit balance. Here also debit balance because debit side is more than the credit. We circles are the balancing figure. Now all those balances we write it down at one place and we call them a trial balance. So writing all the balance of account at one place is called trial balance. So here debit balance we will write it on debit balance column, and credit balance will write it on a credit balance column. We call them trial balance. But if it might be happen at the end of the year, we have not yet, might be some entry we have not yet passed. So we have to pass the entry of what? Adjustment entry. So what we'll do that here? We'll pass the entry of what? The adjustment entry. And adjustment entry is nothing but at the recording stage, but we have not yet passed it. So we have to follow the double entry system. So here we will give the effect here of adjustment entry, and then here we will prepare the final account. In final account, we have two parts. Trading and profit and loss account, which talk about the performance, that is profit or loss, all income expense will come here. And balance sheet talk about the position, asset and liability will come here. Okay. Now you don't have to worry that here. Even though if you understand 60% of this accounting process, it is more than enough for me. The reason is that all these items and from entity to the end till the financial stream, I'm going to discuss with all these points here. One by one, I will discuss each and every point with you that. Okay, so what we'll do that here, we'll start today with the entity part, and I discuss with you the meaning of the accounting as well. So according to AICP, American Institute of Certified Public Accounting, accounting is the art of recording, classifying, summarizing in a significant manner and in terms of money transaction are and even which are in part at least of financial character, interpreting the results thereof. What is recording? That is nothing but a journal, cash book, or subsidiary book. What is classifying? That is account, posting, and balancing. What is summarizing? That is trial balance and financial statement. So there's some significant, there's some way of doing the recording of it. So we have not yet covered how to record it. It will take me 2-3 sessions. Then after that, I will discuss with you how to do the recording. But there's some manner of it that here, and that should be financial in nature. There's some monetary terms, something which we can measure in terms of money. Only we record in the books of account. Okay. Now we'll start today's discussion that here. There's one concept that I want to discuss with you. We have to solve a question on it as well. So in your notebook, write down there. There's one concept that we'll discuss. We call it business. Okay, write down there business, entity, concept. Business entity concept. It is also known as, write down here, also known as separate entity concept, also known as separate entity concept that is. Okay. Now understand what is this business entity concept that is. Okay. Now suppose if I say that here, there is a person who wants to do a business. So let's say there is a person who wants to do the business that here. And suppose his name is that here now. His name is what? Suppose let's say Mr. Sumit. So Mr. Sumit, he's the owner of the business. He's not business, he's the owner of the business. So he decided to do some business that, it might be happen once you will become a chartered accountant. You may do a practice, you may do a teaching, you may start your own business as well that here. Okay. So once the owner, he suppose decided to do a business that year. So he decided to open a business, invested certain amount in a business. Now, this is business. This is what? Business. Now understand this concept here properly. We call them here business. We call them what here? Business that. Okay. So he invests some amount, invests some money there. And in accounting terminology, we call them capital. We call them capital. We have not yet come to the accounting part. It will take me 2-3 sessions. Then I will come to accounting. But I'm giving you one concept that is business entity concept that is. Now, when we do the accounting that is now, we are talking about we're doing the accounting for the purpose of what? Business. So we have to think from the business point of view. So we will discuss, we have to think from the business point of view. Now understand this point. What does it mean that? Okay, now understand it. What does it mean that we're thinking from the business point of view? That. So whether the owner and business both are same? No. You'll say, no, sir. This business belongs to Mr. Sumit only that year. They are the same only. The one owner. No. This concept says that here now, the identity of business is different and the identity of owner is different. They are the two different things. Even though he is the owner, he holds 100%. He's the only owner of the company's business that is. But for the purpose of accounting, we don't treat them as a one entity. We are going to call them the two different separate entities. Okay, business entity concept means the identity of the business is different and the identity of the owner is different. So when we do the accounting, we have to think from generally we are going to do the accounting in the books of business. So we have to think from the business point of view that here. So let's take some example that here. Okay, listen carefully. If I say that here now, this business has let me write it down, some sales that they have. Okay. The business have some sales. Let's say that they have a sales of 50 lakhs rupees. Perfect. Okay. So they recorded the sales here, 50 lakhs rupees. Now they have certain expenses also. Now I will write it down expenses one by one that here now. So they have certain expenses that here. Okay. Now listen carefully. Okay. So what happens? Suppose they have done certain purchases that here. So they done the purchase, some goods they purchase of 30 lakhs rupees. Okay. What other expenses they might have? For example, they are paying the rent. Let's say that here they are paying the rent of, let's say that here, how much here is the amount of how much here? The 3 lakhs rupees. And they're also paying, suppose example, they are paying salary. Salary of how much here? 5 lakh rupees. And what other expenses in business in general? Let's say electricity. So electricity, suppose they are paying for the whole year. Let's say that here the 4 lakh. Okay. And here they're also paying that here from the business. The owner of the business, Mr. Sumit, they also paid his son's fees, college fees or CA fees, whatever that is, the classes fees paid. He also paid the fees of his son from the business. So how much he paid? Let's say 50,000. They plan, they say, okay, now they have given the C intermediate examination, CWA, okay, they have given the examination that, okay. Now what happened now? Once they have given the CMA or whatever the son is doing that here, okay. So whatever is doing, they have given the examination that here now, and they say we want some trip. Okay, let's say they say let's go for some vacation. So this trip is also that here they have paid from the business. Suppose they paid 1,50,000. So all the expenses they recorded, and they have some profit here. Let's say that here now. Let me calculate how much income that they have. 50 lakhs minus 30 lakhs minus 3 lakhs. Minus 5 lakh, minus 4 lakh, minus 50,000 minus 1,50,000. So they have it looks like that they have a profit of 6 lakhs rupees, income minus all expenses. What do you think so that here? Whether this profit is a correct profit? Is it a correct profit? What do you think so that? What do you think so that? Is it a correct profit? The answer is no. This is not a correct profit. It's an incorrect profit. It's an incorrect profit. So you will tell me, sir, why? Why you call it as an incorrect profit? The reason is that here now, when we are doing the accounting of business, don't you think so that here we have to record the income and expenses only of what the business is that here? So here in these items that we have write it down that here in these expenses, there are two expenses that this is fees of his son and the trip. These are the personal expenses. How can you record it as the expense of a business that here? These are the personal expenses. Now you will argue me, so what is the problem that here? The owner of the business, Mr. Sumit, if Mr. Sumit is paying the 50,000 of his son's fees and the trip is paying from the business in that 1,50,000, so what is the problem? He's the only owner. No, there's a problem here. If you record all the personal expenses in the books of the business is not going to give you the correct profit that they will not give you the correct profit. So why they will not give you the correct profit? Because you are recording the personal expenses as well. So we won't be able to find it out the in profit or loss from the business that here. Because in business you are also writing down income and expense of personal nature. So these are the expenses, these are personal in nature. Business entity concept does not allow it. They say, listen, oh, he might be owner. But they say, when we talk about the accounting, they say, listen, if you are doing the accounting in my books, think from the business point of view. We all are business, suppose. So we have to think from the business point of view. So when we are doing the accounting from the business point of view, so what we have to do in that case now, we have to think from the business point of view. We are going to record only income and expenses which are related to the business that here. So what should be the correct treatment that here? Now what should be the correct treatment here? So let me write it down for you. Okay. So if I say that here now, this is incorrect treatment. Okay. Or I can just give me a minute now. You can write it down here also. I'm going to say, if you don't have a space, no problem. You can write it down. Just give me a minute. Okay. You can write it down here. I'm writing down here. Okay. No problem. It's incorrect. So they say, no, this is not a correct treatment now. Now I will write it down that the correct treatment. This is sales. Okay. No problem. That is coming how much here? 50 lakhs rupees. I will reduce expenses that now. Okay. Expenses, when we talk about the first expenses that we have, a purchase. How much we have? Purchase is how much? 30 lakhs rupees. Same rent we have. That is coming here. 3 lakhs rupees. Then we have a salary of rupees 5 lakh. Now electricity of business, not household, residential, okay, business 4 lakh. So now the profit is coming that here now, and this is a correct profit. I don't want to record the personal expenses here. The reason is these two expenses are the personal expenses. So what I will do that here now, Mr. Sumit, these are his personal expenses. How to do the accounting? We are not discussing about the debit and credit. I am explaining you that these personal expenses cannot be, these personal expenses that here now, it cannot be recorded in the books of account. So in the business books of account, I meant to say. So these son's fees of rupees 50,000 and the trip that here now is coming 1,50,000. It is not a part of business expense. How to record it? We are not discussing that. That we'll discuss after 2-3 days. So I'm discussing with you these personal expenses cannot be recorded as a business expense. So if I say that 50 lakh is the sales of my business, minus 30 lakhs, minus here 3 lakhs, minus here 5 lakhs, and minus here 4 lakh, that is coming 8 lakh. These 8 lakh is actually a correct business. The profit is that. So it's a correct profit here. This is a correct profit that we have. Just give me a minute that now. correct profit. Okay. Now this correct profit, just give me a minute. Correct profit. Now you know this profit belongs to whom? To whom this profit belongs? This profit belongs to the owner. And then what we do that is this profit we are going to transfer to the owner. Okay, this profit we'll give it to the owners, and we call them what? We call them here the. We call them what? The is the. We'll give it to the owner. Okay, let me show arrow here. Okay, to the owner will give this profit, that is. So this profit belongs to the owner, and we are going to give it to the owner of the. You got the point that here now? This is how we do the, I mean to say, this is what the business entity concept says that. They say the identity of the owner and business both are different. We cannot record the personal expense of owner as an expense of business. Now you might think so, sir. No, they have paid this 50,000, they have paid this 1,50,000 that year from business. It should be recorded in business. I'm saying I will teach you later how to do the accounting. We're not discussing about how to do the accounting. I'm saying it cannot be recorded as an expense of business is what I'm saying. How to record it? That's a different issue. Okay, how to record it? That's a different issue. Now, two things is that the amount which is invested by the owner in the business, we call them capital. And anything which is taken by from the business for personal use, we call them drawings. This is one terminology, drawings. So anything which I'm taking from the business for personal use, that is drawings. Okay. The amount which is invested by suppose you started a restaurant. You invested 50 lakh rupees, that is capital. And you withdraw rupees 5 lakh from the business for your personal use, we call them drawings. So that's a different thing. That capital and drawings both belongs to the owner of the company, but the amount which is invested by the owner in business, we call them capital. The amount which is withdrawn by the owner for personal use, we call them drawings. This is only difference. One is invested, one is withdrawn by the owner. Okay. How to do the accounting? That's a different issue that we'll discuss after 2-3 sessions. This is what the business entity concept tells. This is what the business entity concept tells us that. Okay. So we cannot record what is the point that we have learned here. The expense of business, the personal expenses cannot be recorded as an expense of business. That here. Okay. Now come to here the basics of accounting. I have already shared the PDF in the app. Okay, so you can download it, or if it is better if you take a printout of it, that is much better. Go to page number 13 there. Okay, go to page number 13 there. Okay, now we are going to solve the question on business entity concept. So what they say, entity concept is a question number 1 and 2. So we'll solve it. So what it says that here now, they say Mr. Saurabh carries on a business as a stationery dealer under the name of Creative Stores. Now, two things. Who is the owner of the business? Mr. Saurabh. Okay. What is the name of the business? That is the Creative Stores. So, who is the owner of the business? That is the Saurabh. And what is the name of the business? Creative Stores. So both are different. Yes, both are different. State which of the following are transactions to be recorded in his business books. So, what they are saying that which are the transactions to be recorded in the books, in the business books. This is what they're asking us that. Okay. So what is the name of the business? Name of the business is Creative Store. Creative Stores that here. Okay. And they are in the business of what? Stationery. So that what this Creative Stores doing? They are in the business of what? Stationery. So we will read it that here from point number A to M, and we'll discuss which item should be recorded in the books of business. But even though they have not asked you in the question that, we'll make one more column and we'll decide that here now is of the owner also. So we'll read each and every transaction. We'll decide in whose books of account it is going to be recorded. Okay, if it is the personal, we'll discuss that. But even though they have not asked you about whether the transaction should be recorded in the books of Saurabh. Saurabh is the owner, Creative Store is the name of the business that here. They ask only for the business, but we'll make it 2 column and we'll decide whether the transaction will be recorded in the books of owner or in the books of Creative Store or both. So we'll discuss all of them in detail. So do one thing, go to this. I will read all these points that here now. Do one thing. Now write down here now. Question number 1. Okay. Question number 1. So draw this for 1 page. Okay, I think it will take at least 1 page. So draw these for at least 1 page. Okay. draw this for one page. Just give me a minute. Just first see that how I'm trying. Just give me a minute. Just 1 minute, okay? So write down here. Okay, here first is serial number, explanation. Here to be recorded in the books of, okay, to be recorded in the books of first Saurabh. Who is Saurabh? Write down in bracket owner, and creative store. Creative store with creative store business. Okay, done. Draw this for one page. Okay, you draw this for one page. Okay. Now, one by one, we'll discuss each and every point. Okay, and then we'll decide where it will come. Now, okay, done. If you have not yet drawn, just pause the video and draw this for one page. Okay. Now, in point number A, they say that cash sales. What do you mean by cash sales? Okay, the way I'm explaining it, the way I'm writing, you have to exactly like that. You have to write it down in your notebook. So I say that here now. First, cash sales means they're selling something in cash. What do you mean by cash sales? They're not selling cash. They're selling something in cash. It means they're selling something. They will receive the cash immediately. So what happened? This is business. Creative stores. Write down creative stores that here now. Now they're selling something. So what they are giving? This is creative stores that. Okay. This is creative stores that. Creative stores. Okay. They're selling something to any party. So they're selling something any party. And in return, cash sales means they will receive the amount immediately. So they sell something, we call them goods. Goods means something in which we are dealing. They are dealing in stationery, they are selling stationery. So cash sales, when they say sales means they're selling what? The stationery, goods they are selling. Okay. So in accounting, goods means it is the item in which we are dealing that here. Okay. So they're selling it. And what transaction says that now? It's a two-way, give and take. So think from the creative stores point. We all are creative stores. We all are creative stores. We sell something. So goods goes out from us. Goods is going out that here. And in return, we are going to receive something from them. What we call them? We call them cash. So here, we'll write it down that the cash here. Now you tell me that here now, whether here, who involves here in these transactions that here? Whether owner involves, no. Who is selling this? So the creative stores that here. So no, so it is not mentioned. No. Who do the sales? Business do the sales that here. Okay. So here I will write it down in first column, that is Saurabh. I will write it down no, and here I will write it down what? Yes. Because why yes? This is the business that here, and this is the owner. So who involves here? Creative stores. You can see that creative stores. So here yes. So how to record it transaction, that we are not discussing. We are whether yes or no, that's it. Owner is not, identity of the owner is different. He's not involved. The business, this is a transaction done by business that here. Okay, so here no and here yes. Now write down point number B. Write down point number B. Okay. Now it says that here now, in point number B, it says that now sales to SP stores on credit. So it is give on credit means we are selling something to SP stores, and on credit means amount is not yet received. So what does it mean? Write down the creative store. Creative stores that now we are selling something. So we sold something, goods. Name of the other party is given, that is SP stores. So let me write it down, SP stores that. But whether we have received the amount from him, no. They say on credit means we have not yet received, we have the right to receive. So we say right to receive. In accounting, we also call them receivable. It's a credit transaction. So it might be happen that cash or it might be credit. Now who involves here? This creative stores, okay? Whether Saurabh is involved. So here it will come no, and here it will come yes. You got the point? This is how to decide in whose books of account it is going to be recorded. How to record it? We'll discuss it later. But yes or no? Okay. Now third, C point. Write down this C point that now. We have to think from the creative stores point of view. Okay. Always think from the entities point of view. We all are supposed creative stores that. Now third, they say purchase sari from Gupta Sons. Now please understand this point that here. Now they say that they have purchased a sari from the Gupta Sons that here. Okay. So they are doing the business of what? Stationery. Why they will purchase a sari? So it looks like a personal expenses that here of the owner. Saurabh might be Saurabh is purchasing for his wife. Okay. So purchases sari from Gupta Sons. Now write down that here now. So here creative stores okay. Wait, creative, no, they are not. Who is purchasing? Not for the purpose of business. Now understand this, not creative store that. Because they are not purchasing stationery that. They are purchasing sari. Why the business will purchase sari? So write down here Saurabh. Write down here Saurabh. Who is Saurabh? Owner of the business. So he is purchasing. See the arrow here. He is purchasing sari. From whom? Gupta. From Gupta Sons. Sari. So okay, he is purchasing what? The sari from the Gupta Sons that year. But in return that year, he has not yet paid that. Why? Now you will ask me, sir, Saurabh is purchasing a sari from Gupta Sons. Why you are saying he is not yet paid? I will tell you why. Okay, let me write it down something and then I will come back to point number. So you can write it down anywhere. I'm writing down here because I have some space here, okay? But you can write it down anywhere, okay? If you write it down here, something, it will be better, okay? You understand that here. What I'm saying that now, whether the transaction is cash transaction or credit transaction, how to decide that here? So it might be happen that now, they will give you in question the information that here, the transaction is a cash transaction or a credit transaction. So it might be specified in question. Specified in question whether the transaction is a cash transaction or a credit transaction now. So here they say cash transaction. If they specify in question cash transaction, so we are going to call them a cash transaction. If they specified in question it's a credit transaction, so we are going to call them a credit transaction. When I see that here in the point number A, it is mentioned there as a cash transaction, so we are going to call them as what? A cash. Here point number B, it is mentioned that a credit transaction, so we are going to call them credit transaction. But what happens if it is not specified? If not specified in question, if it is not specified in what? The question that is whether it's a cash transaction or not. So this is one rule. So what is the rule that they have? Write it down. Now let me tell you that here, this is not basically something which is specified in law or in the accounting. No. It's a general practice in business that. Okay. So you can say that if name of other party not given, if name of other party not given, then we are going to record as what? A cash transaction. Okay. If write down, then I will explain you. If name of other party given, we are going to call it as what? A credit transaction. We are going to call it as the credit transaction. Now understand this one. What does it mean that here? It says that here now, when we are doing a transaction, it might be happen to decide whether it's a cash transaction or credit transaction. We have to see that if they specify in question that it's a cash transaction, so we call them cash transaction. If specified credit, we call them credit transaction. If nothing is specified, we have to see whether the name is given or not. If the name of the other party is not given, we'll call them a cash transaction. If the name of the other party is given, we call them credit transaction. Why? Let me give an example. First of all, what I'm talking about this, it is not mentioned in any law. It is not in accounting book. No. It's a general business practice. Now listen that. Now imagine if you go to any shop. Listen carefully. If you go to any shop and you tell them that here now, give me these goods. Suppose you go to petrol pump. Okay. If you pay them, if they ask you for 100 rupees the total amount. If you pay them 100 rupees, they will not ask you for a name. They will ask whether they will ask you. They will just collect 100 rupees. That's it. They will not ask you what is their name, all that. They will not ask you. Now suppose you go to the petrol, you tell them to fill the petrol of rupees 100 that. And you say, no, example this I'm saying, I don't have 100 rupees now. They will say, come here. What is your name? You'll write it down your name that here. So what happens if name is given? It means it's a credit transaction. This generally is a business practice is that. So if the name is given of the other party, if they write it down the name of the customer, why we write it down the name of the customer? It might be we don't have yet we have not yet received the amount. So we are going to call it credit transaction. If the name is not given, it means they have paid the amount. So we'll treat it as a cash transaction. So whether this rule, this is mentioned in any law, any act, something in accounting, no, nowhere it is mentioned. It's a general practice in industry. Okay. So in accounting, always remember these basics rules that we have to keep in mind, that the basic assumption that we take that. Okay. So here, write it down it somewhere. Okay. So we were discussing that here now about the, now we are discussing that here now about in point number C that here. It is mentioned in question that now purchase sari from Gupta Sons. So obviously who is going to purchase this sari? Owner. Okay, business will not purchase sari. They purchase a sari from Gupta Sons. So whether it's a cash transaction or credit, how to decide? I will call it credit transaction because it is not mentioned in question that it's a cash or credit. Then I have to see the name. The name of the other party is given Gupta Sons. Name is given. It means a credit transaction. We are liable to pay. So Saurabh liable to pay. Saurabh liable to pay. Okay, write down Saurabh liable to pay. Okay, actually Saurabh, okay, why? Because the name is first of all, because the owner is the owner, and I'm going to say the sari cannot be purchased for the purpose of business. So the better assumption is purchased for the personal use. So they say Saurabh purchase. Who is involved? Anywhere creative stores involved here? No. Who involves here? Here who involves that? The Saurabh involves here. Okay, Saurabh involves here. So Saurabh involves here. So here it will come yes, and here it will come no. Perfect. Okay. Now come to point number D now. What it says that now paid rent. Okay, paid rent to landlord where Saurabh reside from his personal bank account. So from where? From his personal bank account. So to residential, that rent is paying by Saurabh from his personal bank account. So write down there now. Who is paying that now? Saurabh. He is the owner. Okay, Saurabh. So he is paying from his bank account. And why bank account? He is paying. To whom he is paying? To his landlord. Okay, for that he receives certain benefit. He is using that property, so he receives certain benefits that here. Okay, he receives certain benefits. Whether the creative stores involved here? No. Only Saurabh involves here. Okay, only Saurabh involves here. So in first here it will come Saurabh yes, and here it will come no. You got the point that here now. So we have to see who involves that here. Okay. Now write it down. Point number E. Write down their point number E now. Okay. So what it says that in next point, use stationery for domestic purpose. Now, please, you have to know how to interpret that here. You're using the stationery. They're also doing the business of what? Stationery. And the stationery used for domestic purpose means for the personal. Understand this one. So write down the creative stores. Creative stores. They are giving goods. Goods means the stationery, the item in which they are dealing. But to whom they are giving? To Saurabh. To Saurabh they are giving. And they will not collect the amount from Saurabh, but they will do the adjustment only in the amount which is invested by the owner. Now, identity of the owner is different. Identity of the business is different. So business say, okay, you take from the business. If you want to take some stationery, no problem in that. But we'll do that. Certain amount of amount is recoverable from it. Don't worry, you have invested certain amount. We'll do the adjustment in that, and we will do the adjustment in capital account. So you can write it down. Will adjust in capital account. How to do that? That's a different part. We'll discuss it later in a capital account. So yes, Saurabh involved, yes, but at the same time, creative stores also involves here. So both of them involve here. So write it down. Yes, yes. This is how you have to think for the accounting. And trust me, you just have to watch these basics of accounting series. It will help you so much. It will help you so much. The reason is that here now, even though you are coming, you're watching, you are in inter or that you're watching this series that here now, and you assume that no, we have already done all this in foundation. Trust me. The day I will finish these basics of accounting series and the day you will watch all these lecture, you will realize that here now you will so many things you are going to learn it. Then you will realize no. You will realize that time you didn't know anything about the basics of accounting. You will come to know that. Just follow this series. Very important series that. Okay. Now here. Next point is that here now F. Okay. What it says in point number F. It says that stationery that here now given from shop to IP store from whom utensils taken for home. Home means Saurabh. So understand what they are saying to you. So this is the entity creative store. Okay, creative stores. They sold some stationery that they have given to some party. So we call them goods. Okay, what is these goods? They have given some stationery. Because they are dealing in stationery. So they have given certain stationery. Okay, to whom they have given? Name is mentioned their IP stores. Now amount is recoverable from IP store because we are selling something to IP store. But there it is mentioned in question that IP store in return, given the item, certain thing not to the business, they have given to Saurabh. What they have given? They have given certain utensils. Okay, they have given certain utensils that here now for home of Mr. Saurabh. So let me tell you, okay, I'm saying again and again, don't worry how to do the accounting. That we'll discuss later on, that how to do the accounting. I'm not discussing with accounting. I'm discussing in whose books of account it is going to be recorded. Yes, creative store involved here because they have given the stationery, and here the Saurabh is also involved. That Saurabh is also involved here. Okay, just give me a minute. Okay. So Saurabh is also involved here. Okay, so both of them involved here. So I will write it down. Yes. Okay. I'll write down there. Yes. Okay. The next point that here. G. Okay. Now what it mentioned that here, next point that here. It says that here now, paid stock insurance. Where we keep the stock? Business stock. What I mean by stock? Stock of a station. The stock, the goods which we sell. So we take insurance. The paid stock insurance premium by check. Okay. So Saurabh is not involved that here. So write down that here now. Creative store. Creative stores that here now. They pay certain amount by check that here now. Bank. To other party. So that's the insurance for the purpose of insurance. And return they will get the benefit that if any loss happen, they will recover the amount from them. There's certain benefits that they will receive from them here. So who involves here? Who involves here? Only creative stores that only creative stores involve that here. Okay. So what is going to happen now here? No, yes. No, yes. Saurabh is not involved here. Okay, done. Next one. H. Okay. Now write down there. Next point that here now is wife's life insurance premium. The wife of Saurabh. Okay. The wife's life insurance premium. Rupees 200 paid to LIC from where they are paying. From creative stores they are paying. Okay. So now understand this. Write down age. Creative store. Creative stores that okay. So this is a business creative stores that here now. From creative store it is mentioned that they paid by cash. Okay. To a LIC. But here LIC is going to give the benefit not to a business. We are not doing the insurance of what? The stock. It's not this. What is the difference between point number G and H? In point number G, we paid for the business. Stock is in the business. So business insurance, that is a business expense. Here we are paying the wife of the Saurabh wife. We are paying her life insurance policy that here. So from business, it is mentioned creative stores paid that here. So they are paying, they are giving certain benefits that here. Okay. That they are giving to certain benefits to Saurabh. We'll say why Saurabh's wife. Okay. Ultimately it's going to be paid by Saurabh. Okay. So personal expense, Saurabh, wife, kids, whoever that. So they are giving certain benefits to Saurabh. So who involves that here now? Creative stores involve that here now. And here Saurabh involved here. So both of them involved here. So this is how we decide that in both books of accounting, the transaction should be recorded. So in both, how to record it? That's a different thing. But in both books of account, the transaction is going to be recorded here. You got the point? So always think like that. This arrow, this will help you so much. All these arrow. Okay. Now, next point. H. Now, next is the I point. Okay. Now, what says that send cash to bank. So they send the cash. Obviously, you may think not personal cash, not personal cash. Generally, we deposit the cash, the business cash generally. Generally, I am saying. Now, always think that in accounting, always remember that. If anytime some assumption is going to, you have to take, always take a normal assumption. Okay. The cash will be deposited into bank. It might be deposited by Saurabh his personal cash. It might be deposited business cash. But generally, if you're doing a business, generally we deposit business cash in bank. So always think normal. Some may argue me, no, sir. It might be cash of the Saurabh personal cash. It might be. But what is normal here? If you're doing the business, generally we deposit the cash of business there. Okay. So write down here now. Write down. Now creative stores depositing certain cash in bank account. So they are depositing certain cash. And in return, what happened? Bank will increase their bank balance. In return, what they will get here? In return, bank will increase their bank balance. So write down there. Bank will increase the balance in account. Increase the balance in account. That. Okay, so creative stores involve here. Okay, no Saurabh. So here, no and yes. Okay, no and yes. Perfect. Okay. Now here, next I, then we have J. So what is mentioned that next? Exchange of old domestic furniture for new furniture for shop. It's a domestic furniture exchange. You understand what they're saying? Now here, Saurabh is owner. He is giving his domestic furniture to some party. Some party is giving domestic furniture. In return that here now, he is getting a new furniture, New furniture return he is getting. But remember that this new furniture is not getting by the business. They say, read carefully, exchange old domestic furniture for the new furniture for what? Shop. So they give their what? Now Saurabh, new furniture is not, sorry, new furniture is for shop. Yeah. New furniture is going to get by shop, creative store. Understand it? Saurabh gave his personal furniture, domestic residential furniture, and in return they will get a new furniture, and that is for the purpose of shop. So who involves here? Saurabh as well as the creative store. That who involves here? Saurabh and creative store, both of them. So we are going to say yes and yes. Okay, simple. Both of them involved here. Okay, so we'll say yes and yes here. Okay. Now, next point. Point number K. What it says that here now? They say that a borrowed rupees 10,000 from Mrs. Saurabh, the wife of Saurabh, now at the rate of 9% per annum for shop. So who borrow that here? Okay, for shop means a creative store. So I'll write it down here. Creative stores. Okay, creative stores. They borrowed 10,000 rupees from wife of Saurabh. Cash that they have borrowed. We call it a loan that here now. Mrs. Saurabh. And the business is liable to pay to her. So liable to pay. Now please understand, they have borrowed from, liable to repay. They borrow from Mrs. Saurabh that here. Okay. So who involves creative stores? Don't say Saurabh. So here it will come no. Saurabh no. Business yes. If they borrow a loan from Saurabh, then Saurabh will also come as yes that here. Okay. Now next is that here. L point. Okay. Now what it says, withdraw from shop for domestic use. From shop use for some personal use, withdraw. So who withdraw? Obviously the owner. Saurabh withdraw from the shop for some personal use. So write down here now. Here, creative stores. From business, certain cash withdrawn by Saurabh. Okay, certain cash withdrawn by Saurabh. And this cash that here now, what happens? Certain cash which is withdrawn by what? The Saurabh here that here now. Okay. Now obviously this amount will be adjusted in capital. Think from the business point of view that here. So creative stores, from creative stores, Saurabh withdraw certain cash. So we say, okay, that from the business point of view, we'll say certain amount is receivable from you. But we'll say that we'll adjust in the amount that already invested by the owner. We'll discuss in detail later on. But all this amount which is withdrawn by the owner will adjust in their capital account. So write down will adjust in capital account. So both of them involve here business and Saurabh. So write down there yes, yes. Yes and yes here. Okay, simple. Now, next one. M point. What it says that here now, they say paid salary for domestic servant from shop. So it's a personal expense. So from shop, so creative stores. Paid certain amount of cash. Paid certain amount of cash to domestic servant, that to a domestic servant. And this domestic servant that here, okay, this domestic servant that here now is going to provide the services not to business, that they are providing the services to Saurabh. They are giving the benefit to Saurabh. So who involves here? Saurabh, because he is getting the benefit. And who paid the amount? Creative store. So both are involved here. So it is going to be recorded in the books of both the party. Yes, yes. So this is how we decide that here now. This is how we decide that here now. In books of account, the transaction should be the recorded that here. You got the point that here now? Okay. Done. Okay. Now, done with the question number 1. Now the similar that here, now we have the question number 2 also. Here also we have to decide in which books of account the transaction should be recorded that here. Okay, now come to question number 2. So what question number 2 says that here now? It says here, Manoj carries on business as a cloth dealer. State which of the following are transactions to be recorded in business book. So first is that here now is the cloth dealer. So Manoj carries on a business that here, and he's running the business of cloth. So that cloth store is the one that is a business, and Manoj is the owner. So they ask us which transaction will be recorded in the business books. Means like the similar previous question, they ask us in the cloth stores that here. But what we'll do that, we'll see that in both the parties, the cloth stores as well as that here now in the books of Manoj. So draw this for one page now. Question number 2. Question number 2. What happened? Okay, just give me a minute. Okay, now write down there. Okay, write down there. That is serial number, explanation to be recorded in the books of Manoj. Who is Manoj? Is the owner of the business. Now cloth store. What's cloth store? That is business. Okay, not that. Okay, now draw at least for one page. If required, then you can draw it more. Now write down there point number A. What says point number A? It says that here now he purchased a perambulator for his son. And one more thing that here, certain time it might get happen, you might get confused. So he purchased it, but from where is paying? So remember that. Write down certain rules that here. Always remember that now. Write down somewhere. Personal expenses from personal account. Means personal expenses, they are not paying from business. This is what we'll assume that always. Now business expenses from business account. Means personal expense from personal money, business expense from the business that. Unless otherwise specified in the question. So always will assume that now personal expenses from personal money, business expense from business money, unless and until otherwise specified in the. If they say the personal expense from business, then we'll say okay. If business expense from personal, let's say okay. But if they specify otherwise, personal, business. Okay. Now they purchase, here it is mentioned that Mr. Manoj purchased some asset for his son. Okay. Now write down that Manoj. The identity of the Manoj is different, and the identity of business is different as per the business entity concept. He purchased, okay, perambulator from someone. The name of the other party is not given, and he is going to pay. It is not mentioned that here cash or credit, but the name of the other party is not given, so we'll say it's a cash transaction. So he pays certain cash for it. So business is not involved here. Okay, business is not involved here. He pays certain cash for it. So Manoj is involved here. So Manoj is the owner. So it will be recorded in the books of Manoj, not in the books of owner. Simple. Okay. Now here, next that. Okay, point number B. So it says that here now he employs a typist for official correspondence, mean for the purpose of business, and pay him rupees 450 per month. Now write down here cloth store for official, and he pays 450. It is not saying that you're from personal, from business. So if the business expense will sit from the business they are paying. Personal expense for personal he's paying. If it is mentioned that here otherwise, so then we will consider that. So cloth store, then he's getting certain services. Okay, he's getting some services from the typewriter. Okay, he's a typewriter. So he's getting certain services from typewriter, and for that they're paying amount to the typewriter. So whether the Manoj is involved, the answer is no. For official use it is mentioned that the cloth store that. Okay, so in the books of Manoj, no, and here you will say yes. Okay, now this is how we decide that here whether the transaction I'm going to say whoever involved, only in their book it is going to be recorded that here. Okay, and trust me, these series of basics of account, it will be so good that here, because you're going to learn so many things you will learn that in this series that. Okay, now point number C, recommend to your friends also. Okay, CA Inter Foundation, CMA Inter Foundation, whatever that here. Okay, they recommend them the basics of accounting series. It is going to help them so much. Okay, now point number C, what it says that now he buys a showcase for rupees 350. Now here's ambiguity. What does it mean that they buy a showcase, but for what? For business or personal? It's not mentioned there. And he's in the business of cloth. We have to take certain assumptions here. So he's in the business of what? Cloth. So when I say that he's in the business of cloth, so might be, not sure, might be purchase a showcase for the purpose of business. We know I'm going to say we purchase a rack for all those cloth in shop that here to keep the cloth there. Okay, so it might be his purchase for the business. So we have to take, it is not mentioned, so we assume that we like to note that. So creative stores, not creative, sorry, cloth stores. Cloth stores. Okay, that they purchase that here now showcase from some party. Okay, name of the other party is not given, so they pay the amount for it, cash. So we involve a cloth store and we assume that they purchase the showcase for the business use on. Okay, so write down one note there. Assume that showcase is for shop. Is assume that showcase is for what? Shop. Okay, so no in books of Manoj, yes in books of the business that here. Okay, now next point. Okay, so what it says that here, they say here that he sells old domestic furniture for rupees 300. So it is a personal, like the furniture, so business is not involved. So write down that Manoj, he sold domestic furniture okay, and in return he gets some cash that year. So domestic means not a business, so Manoj. Okay, Manoj that here. So here, yes, it will come in the books of Manoj that, not in the books of business that here. Okay, or number D. Now write down that here now F. Next one. So what it says that here now, they say that here now is he purchased a cloth. He's in the business of cloth only. No? He's in the business of cloth only. It means he's purchasing for the purpose of business. Okay. So write down there. Cloth stores. He purchased certain goods. Cloth from some party, and then he's going to pay. Okay, he paid them cash. Name is not given, so say he paid them. So why I'm saying that it is for the purpose of business only, because they purchased the cloth and they are in the business of cloth. In previous question, you have to see the nature of business. In previous question, the person Saurav was doing the business of stationery. He purchased sari. So how can it is a personal expense, because he's doing the business of stationery and he purchased sari. So that is a personal expense. Now here he purchased that here the cloth. He's in the business of cloth. It means it is for the purpose of business. So you have to think like that. Okay. So business involved here. So first no, and then you will write it down that here now. Yes, that here. Okay. Now next one. G. So what it says here, F, we have F. So sorry, this is E. Wait. E. And this is F. Okay, F point now. Now here it says that. Okay, what it says. Oh, just 1 minute. Okay, now F point. It says that now he buys the cash register machine. Okay, this is a machine that we keep the cash for 15,000. So what you have to apply your basic knowledge. When basic means common sense that here. What is this cash register? To obviously for the purpose of the register where we keep the cash, that machine that we keep the cash, that is for the purpose of business that here. Okay, so write down cloth store. Write down the cloth stores that here now. They purchase they purchase a machine that here now. They purchase the machine that here now, and from some party, and name of the party is not given, so we'll say he's paid the amount that year. So who purchased this machine that year? Business. So whether the Manoj is involved? No. So it will be recorded only in the books of business. Now next point, G. So it says that now he purchased the domestic utensils for rupees 200, for which he gives cloth from the shop. Now understand this point. Now what is going to happen in G point? In a cloth stores, that is business, they give certain cloth to someone that here now. Okay, goods, we call them goods because he is doing the business of cloth, to some party, and that party is going to give certain utensil for personal use of Manoj. This is what it is mentioned that here, Manoj. Okay, that's certain for domestic purpose. They are domestic purpose. They're giving certain utensils that here now. So what happened then? Now cloth store that here, they give the cloth to a other party, and return the Manoj is going to take. So here both of them are involved here. So both of them involved. So we have to write it down that here. Yes, in both books of account. You got the point here? Simple. Now next point, H. What it says that here now, come to next point here. They say he takes a cloth rupees 25 for use at home. So cloth, he is doing the business of cloth. He takes the cloth of rupees 25 for use at what? Home. So cloth store, this is business. Now they have given certain cloth to Manoj. Goods, they have given certain cloth to Manoj, and in Manoj in return that here I will say will be for the personal use. So we will adjust, in that case we will adjust in his capital account. So both of them involved, because the goods is receiving by Manoj for his personal use and giving by the business. So both of them involved. So we will write it down here. Yes. Okay, both of them involved here. Okay, done. Now next one. Okay, I point. What it says that now? They say that he pays salary of to his domestic servant rupees 50 from private fund. The business is not involved. He's paying the domestic servant rupees 50 from his private fund only. The business is not involved here. Perfect. So what happened here? Manoj is giving cash to a domestic servant from, and he's going to receive the services that are for that. But who involved? Business, they are not paying from business. So Manoj is paying. So we will record in the books of Manoj. It will not come in the books of business. Next one that you know, J. Okay. So it mentioned that here now, he takes a loan of rupees 10,000 from a friend for marriage of his daughter. Okay. But he's taking a loan from his friend, not from business. So business is not involved. So Manoj took a loan, certain cash he has received in the form of loan from friend, and in return obviously is liable to pay to his friend, liable to repay this amount. Okay. Now here, who involves here? Manoj only, not business. So it will be recorded in the books of Manoj, not in the books of business. This is how we decide that here, how to record the invoice books of account, the transaction should be recorded. So remember all this. Okay. So what we've learned today that here, we learned the concept business entity concept. In case of business entity concept, the identity of the owner is different, that here now identity of the business is different. And trust me that here, we are going to go in so much in depth for these basics of accounting. You will learn so many things that here. Okay. I have not yet come to the rules of how to do the accounting. I'm just discussing step by step with you. So what we have discussed that here today, we have discussed this business entity concept that here. We have discussed the business entity concept that here. This entity. Okay. We discuss about the entity. Now in the next session, one by one, we will go that there are so many other things also I want to discuss with you. Then I will teach you this transaction that here now, how to do the recording, how we prepare journal, how we prepare cash book, how we prepare other subsidiary book, how we prepare ledger, how we do posting, how we do totaling balancing, how we prepare trial, each and everything step by step I will go that here. Okay, you know that here in these series, this is one question is that here now. If you go to that, is question number 31. This question is going to take me around 2.5 or 3 hours. You say what? Yes. Because here in these questions, I am to teach you from the basic, from the scratch to the last, from first to the last time. So if you understand this question number 31, we'll solve it together in class. If you understand this question number 31, you are very, very good in basics of accounting. The basics of accounting will be so strong that here. Here my intention is not to, I'm just to score that here, not we are doing this to score the marks that I'm to say, to understand the concept that here. So they will not ask you the question like 31 in the exam. But why we are doing that here? Because I want you to get the mastery in basics of accounting. If you get the mastery in basics of accounting, don't worry about other chapters. You will easily do the other chapter that here. What's more important to understand the concept that here. And just trust me and follow whatever I was saying that here. And see the miracle what will happen. And I know that here. I know you have potential that you can score 80 plus in advanced accounting. Just you have to follow what I'm saying to you. Okay, that is for today. Okay, that is for today that here now. We'll conclude here that here now. And in the coming session, certain other points I will discuss with you that here now. And that is for that. Okay, that is for today. So what we'll do that here now is, before you come to the next session that here, what I want to say in home, just do the revision that here of the business entity concept. Okay, so we'll conclude here. If you're watching it on app, it's okay. If you want to say anything to me, to a paid student, you can drop me a message anytime. And those who are watching this series on YouTube, if you want to say anything that here, you can drop me a message in the comment section. That is for today. Take care all of you. Bye-bye.